I mean, for those who want to just, know few habits about Mr. Rogers, well, he loves his bow tie. He adjusts them every time before the interview starts. He loves to talk about commodity. He's one person who's very shy, but very vocal about his views. I've enjoyed reading his book over the years now. As a student of finance, I've learned from them. And as a business journalist, I've been interacting with him for over 20 years. And trust me, when I was a junior reporter, I would always feel like a kid in the candy store when Mr. Roger used to come on my show. So it's been an extraordinary pleasure for us to welcome you. We've got a big audience here. Thank you all for waiting patiently. My sincere apologies that it took me time. I guess I'm going to start the opening remark by saying that in life, we've been using words like FOMO. We've been using words like panic. But I guess I'll have to use the word patience because patience is rewarding and that is what everybody's done. They patiently waited for this interaction to start. So I'm going to throw the opening remark at you, Mr. Rogers. What is your view of the world? How bad the damage is, and are we looking at a complete reboot?
In 2008, the world had a big problem because of too much debt. Remember? Since then, the debt has skyrocketed everywhere. Even India, China, everywhere. 10 years ago, China had virtually no debt. Now they've got a lot of debt. Everywhere does. The next time we have a problem, and we're having it now, it's going to be the worst in my lifetime. I mean, it's a simple statement. The debt is much, much, much higher now. It has to be worse. We have these problems every few years. The next one's going to be horrible.
Why US markets reacting as if nothing's happened in the world? I looked at NASDAQ last night. It's in the green. It is in the green. How remarkable is that?
Wait a minute, nothing has happened. What are you talking about? The United States is spending trillions with a T, trillions of dollars and printing trillions of dollars. What do you mean nothing happened? Japan, every day the Bank of Japan the guy goes to work, turns on the printing presses, prints as fast as he can, buys stocks, buys ETFs, buys bonds. What do you mean nothing's happened? All over the world. All of these central banks and governments are printing and spending and borrowing as much as they can. Of course the market's going up.
Do you think, given the way how markets have gone up, both locally, when I say locally for India, and for international markets, there's a huge disconnect between the on-ground reality versus the market levels?
Yeah, of course there is. But remember what I just said. Nearly every country in the world is printing and spending lots of money now. That money's got to go somewhere. It's going into markets. That's what happens. The excess money goes into markets. But eventually, and remember there's an election in America in 6 months in November, and all of those guys want to get reelected. They don't care about you and me and our kids. They care about November getting reelected. So all sorts of good things are going to be happening, and markets will be okay for a while. But remember that the debt is going through the roof everywhere. The money printing is everywhere, and eventually we're going to pay the price.
It is often said that you should never fight the Fed. Would you apply this again?
I just got through saying it. All this money is going to go somewhere. It's coming. Mainly the Federal Reserve in the U.S. started it, the American Central Bank. Don't fight the Fed, but eventually we're going to pay the price.
When I spoke to you a couple of years ago, about 8-10 years ago, you said if you want to get rich, you need to do one thing, which is buy a silver spoon, stack sugar in your pocket, and start eating rice. So if somebody wants to make money in the post-COVID world, what is the secret recipe here?
Well, I own silver. I own gold. I didn't own it, I don't think, when you and I spoke before, because I stopped buying it for a while. I haven't sold. I've never sold any. The summer of 2019, I started buying gold and silver again. Agriculture is still a disaster. Agriculture's probably got great opportunities if you buy the commodities themselves. It's hard to get rich in agriculture in India because the Indian government protects farmers. Oh, those poor farmers, all the protection they get from the Indian government. They could be rich if the government would leave them alone. So agriculture worldwide, gold and silver, some parts of the world economy have been smashed. transportation, airlines, tourism, anything to do with travel has been killed. I'm looking for, I bought a shipping company in Russia last week. I bought a wine company in China last week. You know, some of these things have been really beaten down, and they're probably, even if the bear market hits again, they're probably not going to go down much. I hope.
Are you fully invested in this market, Mr. Rogers?
Fully invested? No, too late. I'm too lazy. Much too lazy. If I weren't lazy, I would be. But you know, it's a lot of hard work to go out there and buy these things. I have bought some things, continue to buy. I own a lot of U.S. dollars. I own a lot of U.S. dollars because when the turmoil gets bad again, and it already is, people look for a safe haven. They think the U.S. dollar is a safe haven. It's not, but they think it is for historic reasons and compared to the euro and other things. So I own a whole lot of U.S. dollars. It's going to get overpriced. I hope I'm smart enough to sell it. It might turn into a bubble. I hope I'm smart enough to sell it when that happens and put my money elsewhere. And by the way, it may be gold at that time. Often when gold and silver when the dollar goes up a lot, gold and silver go down. Might be silver. Silver is much cheaper than gold right now on a historic basis. As you know, if you go back and look at the ratio between gold and silver, it is the highest it's ever been in recorded history. So silver is certainly not overpriced in 2020.
You are a big votary of market cycles, Mr. Rogers, and you've always said that in some of the books which I've read, you've always said that in markets, the same thing keeps on repeating itself again and again. It's a cycle of fear and greed. You need to figure out which template is at play. So what does the current medical crisis remind you of? When did we see economy shrink like this before?
Well, I don't think maybe in the beginning of the First World War, maybe in August of 1914, you had this kind of collapse. Because, you know, even in the summer in Europe in 1914, everybody thought everything was okay. Nobody expected a gigantic world war. So that collapse was probably somewhat comparable to this. But, you know, no, it's nothing been quite like this. The markets were overvalued. The U.S. market had been going up for over 10 years, the longest in American history. And it was sort of a bubble there at the end. Everything was going straight up for a while because of all the money printing. So the market was due for a correction or for something to happen, and along came the virus. But something always comes along.
What makes Jim Rogers a successful investor? Is he a contrarian? That is why he makes money?
Well, people say I'm a contrarian, but my way of looking at the world, you know, I look for things that are cheap, where there's change. Well, if something's cheap, obviously it's being ignored. And so people will then say, well, he's a contrarian. He looks at things that are ignored. Well, of course, that's what I want to find, things that are cheap. I don't like to go and look at things that everybody else is buying. So if you buy things that other people are ignoring, people call you a contrarian. I just call it looking for value.
Is it important to be a contrarian to be a successful investor?
Well, it's important to think for yourself and to be independent and to be curious. I'm trying to teach my daughters, think for yourself, don't listen to other people, be curious, and if everybody's saying the same thing, you look the other way. That is very important, whether it's TV reporters, football players, life. That's the way you will be successful in life at anything if you don't follow the crowd.
We've always spoken to Jim Rogers about his market view, but today I want to speak about Jim Rogers, his life as an investor, as a trader. I'm going to take the clock back and really clock back when you had no white hair, you were in a different country, and you were investing differently. What convinced you when you were in your teens and your 20s that you wanted to be an investor and you wanted to be a trader?
I knew nothing about investing. I knew nothing about Wall Street. And when I was 21, I happened to get a summer job on Wall Street. I didn't know there was a difference in stocks and bonds. I thought they were all the same thing. I knew something bad had happened in 1920. That's all I knew. But I got there and I fell in love because all my life I'd been very interested and curious about what was happening in the world. And here was a place they would pay me to know what was happening in the world. Pay me a lot if I did it right. So I fell in love. I thought I was going to go to law school and medical school and business school until I got this summer job. I didn't go to business school. I didn't go to law school. I didn't go to medical school. I went to Wall Street.
Okay. How did you react when you made your first million? Do you remember the day you made your $1 million first? How did it feel like?
I have the calendar right over there on my desk to this moment. Of course, look, when you grow up poor, I didn't have any money at all when I went to Wall Street. I had $600 US. That's all I had. I didn't have any debts, but no. When I suddenly had a few years later had $1 million, oh, I couldn't believe it. It was unbelievable.
Today, information is freely available. Information is no longer an edge. People have access to internet, WhatsApp. What happens in Singapore, I can figure out in 10 seconds sitting in India. So do you think now that information is readily available, investors and traders are much more mature than what they were in 70s and 80s and 90s?
No, because, yes, we can all find out something instantly now. But if 100 people go into a room or turn on the internet or whatever, and they all hear exactly the same thing at exactly the same moment, only 7 or 8 of them are going to get it right. Judgment is what they haven't been able to give us all. If we can all get good judgment instantly, oh my gosh, we'd all be rich. None of us would be rich because we'd all know the same thing. It's judgment. Yeah, we get the information very quickly. But unless you have the judgment or the experience or whatever, it's not going to do you any good.
A lot of people have got influence with your writings, with your interviews, your assessment of commodities and the assessment of risk. Who has influenced you personally the most in your life and investing career?
Well, there's no name is what you're looking for, except for the fact that I learned early on that some people did their homework. When I first went to Wall Street, I thought everybody knew everything because they were educated, they were experienced. But I quickly learned most people don't know anything. They don't even read the annual report. So I learned very early, if you just read the annual report, you do more than 98% of investors on Wall Street. And if you read the notes to the annual, oh my gosh, you do more than everybody. So I learned early on from experience of looking around that if you do your homework, you might be successful. But nobody wants to do their homework. Everybody wants a hot tip. Everybody wants to get rich this week. It's boring to do your homework and to read the annual reports and to find out about companies. Oh my gosh. No. Give us a hot tip. Don't tell us to go do research.
So let me ask you a hot tip though.
You want a hot tip?
Yeah.
Watch E.T. now. If you watch E.T. now, you'll get all the ideas you need. Now, don't buy just because it's on E.T. now, but that's where you can start. You'll get your ideas and then you do your research.
Well, thank you for the endorsement. Mr. Rogers, we are using digital technology. Sitting at home had taught us that we can work sitting at home. In terms of importance of traveling out and doing work is getting reduced. What is your view on the world that where disruption will take place and where do you think winners will emerge?
Where do I think what?
The winners will emerge.
Well, there's no question. You just pointed out, you and I are talking, I think we're probably talking on Zoom or something like that. These technologies didn't exist 10 years ago, 20 years ago. So the world is changing very dramatically. I can go to my doctor now. I can say to him, you see this eye right here, over the internet. This is all, many things are dramatically. My children are not in schools closed, so they're doing their education over the internet. So many things are now accelerating. All of this was happening anyway, and it would have happened, but it's been accelerated by the fact that we have to have education over the internet, et cetera, et cetera. So that's why many things that were in process are now being accelerated, and it usually happens in any kind of crisis throughout history. So some of these say home delivery, in Singapore, you can't go to a restaurant. So home delivery is booming. It's going to boom everywhere in the world.
Hmm. Uh, Mr. Rogers, when we spoke last, you also said that you like India. Do you like India because of demographics? You like India because you love the food here? Or you like India because you think it's a great investment destination?
It's the women. What's wrong with you? No, India, I tell people all over the world, if you can only visit one country in your life, you should go to India. The man-made sites, the natural sites, are like no place in the world. Kind of had them, but they destroyed much of it. No. If you walk down the streets in India, the women, the men are just astonishing. The rich ones and the poor ones, everybody. The food, it's just an amazing place. The religions, the languages, there's nothing like it. So if you could only go to one country in the world, it is a sensory feast. It is a constant sensory feast. And I will tell you, I know I'm on ET, but I do want to say this. I remember the first time I was in India, I read this newspaper called ET. I couldn't believe Electronic Times. I mean,
Economic
Economic
times.
Times. I couldn't believe what a good newspaper it was. You didn't even have TV in those days. So there are a lot of great things in India, a lot of very educated, smart Indians. No, it's your bureaucracy. You have the worst bureaucracy in the world, but no, it's a fabulous country.
Hmm. Have you have you extensively over the course of investing career invested in Indian companies?
Extensively. I don't know. Well, I have certainly at times in my life. Probably my first time was 20 or 25 years ago. At times I have invested in India. I have nothing in India now, partly because you heard my views on the world before. And also I used to be a big fan of Mr. Moody. He's still a wonderful guy, but he's not doing for India, for the Indian economy, what I would do. So I don't have any investments in India now. I have had them in the past.
Hmm. Okay, can you see the picture on your screen, Mr. Rogers? I can see
I
a
do.
it's a convertible.
I
Tell us
do.
about
Who
this
is that
picture.
boy? Who is that little boy?
When was this? Where was this?
This, I'm not quite sure. It must have been New York, but it was certainly that's the car that the lady there is my wife. She and I got married going around the world, and this was the trip we used going around the world. That was a one of a kind car. It was made in 1998, so this is probably 1998, 1999.
Is it true that before investing, you like to travel, you like to observe, and then you make your decision?
Well, yes, I learned that the hard way. I learned that if you go, whatever it is, you read about a country in the American press, for instance, it's distorted. It's crazy. But if you go someplace, you will find out what's really happening, and you will find opportunities. Likewise with a company, some companies, some industries, especially when they're beaten down, if you go and talk to the people, you might find very good opportunity. I told you I bought a Russian shipping company last week. Well, I mean, it's a disaster. But I went to see the people and I found out, yeah, it's a disaster. But things are changing and things are probably going to be okay. And so I've been buying the stock.
Hmm. If you have to, let's say, if you had the option of investing only in one instrument or one commodity for next 3 to 5 years, will it be crude or will it be gold?
Silver.
And why is that?
Well, silver is, if you look at the ratio of silver and gold, it's the highest it's ever been in recorded history. Never in history has silver been this cheap compared to gold. Maybe there are reasons, well, there are always reasons when something like this happens. I want to own precious metals. You said 5 years, certainly in the next 5 years. I would prefer to own gold or silver, but if I had the option, I would own silver just because it's cheaper. It's much, much cheaper. I own both. I bought more gold recently, but I'd prefer to buy silver today than either of the two you mentioned.
Mr. Rogers, before the COVID crisis also, the FANG stocks, which is Facebook, Amazon, Alphabet, earlier Google, and Netflix, these stocks were essentially the most sought after stocks. And guess what? Even after the crisis, when world is a bit shaky, the US internet or tech companies have emerged as the real survivors. What's your view on buying, investing in some of the US tech blue chip companies?
Well, first of all, I'm not smart enough to understand most technologies. So unless I really understand something, I don't like to invest. And second, I don't like to buy expensive stocks. Yeah, they went down some, but they're still very expensive compared to most other uh, industries and stocks. But listen, I know plenty of people who make a lot of money investing in those things. It's not for me. I have my own way, and that's not my way.
Okay, so I'm going to now move to the second part of the webinar and perhaps start taking questions which are related to that. Mr. Rogers, what do you think will change in terms of customer behavior and psychology till the time a vaccine is not discovered?
What would change in psychology? Well, again, the problem is everybody wants hot tips. Everybody wants me to say, listen, buy this stock or turn to page 37 of this book and you'll find out how to do it. It's not that easy. If I told you you could only have 20 investments in your life, you wouldn't jump in and out. You wouldn't see some guy speaking on the internet or on ET now. You'd be very careful about what you bought and sold. And that's the single most investment, the single most, the best investment advice I can give anybody is don't invest unless you yourself know a lot about it. Don't even listen to ET now. Maybe you'll get an idea, but don't invest unless you yourself know a lot about if I told you to buy X and you went and bought X, you wouldn't know what to do next. If it goes up or down, you have no clue. Stay with what you know if you want to be successful.
Warren Buffett is talking about, question from the webinar. Warren Buffett is again and again talking about investing in ETFs, low cost ETFs. Do you think that's a good way to start?
Yes. I'm a fan of ETFs. Well, they've grown a whole lot. It's an easy way, an efficient way for many people to invest in markets, whether it's stocks or commodities or bonds or anything else. So yes, I'm a fan of ETFs. But I hasten to tell you the next time around, the stocks in the ETFs are going to get killed because that's what everybody owns. All the ETFs own Apple. All the ETFs own Amazon. So when people dump all these ETFs, they're going to be dumping all the same stocks. And so you're going to find that the stocks in the ETFs get crushed much more than they would in a normal bear market. If you can find stocks or any investment that's not in an ETF, you should do a lot of research because it's not overexploited, it's not overpriced, and it's not going to get decimated in the next bear market. And when you find one, please send me an email. Please send me an email because I want to look at them too.
Okay, lots of questions coming on gold. We've got an Indian audience, and Mr. Rogers, you'll appreciate that with Indian audience, you will always get questions on gold. What is a better way to buy gold? Gold ETFs or physical gold?
Well, I prefer physical gold myself, but I own ETFs. Don't think I don't own. I own ETFs. If you really know what you're doing, you can buy gold mining stocks. Now, the problem is there are hundreds of gold mining stocks in the world. You got to get the right one. It was a famous American author who once said, a gold mine is a hole in the ground with a liar standing at the top. There are hundreds of gold mines, but if you know the right one, if you know a company that's going to find gold in Mumbai, you should buy all you can. And then you call me. I want to buy it too. But if you don't know that, and that there are hundreds, futures, if you're good at futures and trading, is a wonderful leverage. You can buy gold futures or silver futures with 5-10%. It's fantastic. You'll get wiped out in 2 hours if you don't know what you're doing, but that's a great way to participate. But buying, many Indians, as you know, every Indian wife has lots of gold. She loves to get gold. I do too. Physical gold is certainly good. Gold coins. I own a lot of gold coins, partly because, if there's a crisis, you can't go down to the shop and take a gold bar. The guy, first of all, he doesn't know if it's real. Second, if it is, he cannot make change. You cannot buy a loaf of bread with a gold bar. So gold coins, it's more likely they'll know they're real, or silver coins. So I own a lot of gold and silver coins too, but I own ETFs. I don't own any mines at the moment, and I don't own any futures at the moment. But futures are work. Mines are work. All of it. I'm lazy. But if you're willing to work, learn about the mining companies, find the right gold mines, and you'll get unbelievably rich.
Okay. We got a question coming from Colonel Rohit Dev, Mr. Rogers, for you. What type of industries potentially could move out of China to India now that global supply chain is going to get disturbed? We may not be living in an asymmetric world, sir. We may be living in a very confused world where supply chains will get disrupted.
Well, some may move out of China. I'm not sure they're going to move to India. I would suspect it's more likely they'll move to someplace like North Korea, maybe Vietnam, places like that. Some will move to India. I hope Mr. Moody can persuade Indians to be more productive. The problem is India's got this gigantic bureaucracy, and they don't like people who make a lot of money, unless it's them. The politicians want to make the money, but it's just, India has not been, I told you before, India's the best country in the world to visit, but it's not the best country in the world to do business or to get rich. Okay. But if Mr. Moody can change that, he said when he was running, he was going to change all that he understood all that about India. He was going to make India like China or Vietnam or Korea or someplace. He hasn't done it. If he does it, yes, it would be great for India.
Given that right now there's a medical emergency, another question coming up. Global pharma stocks have made a comeback. Would you buy into pharma and medical stocks with the assumption that the world has woken up to the needs of medical now?
Well, of course, if you know the right ones, and again, unless I know a lot about something, I don't invest. But there is no question. In fact, as I think about it, I should do more homework, more research. There is no question that especially now and in the next 5 or 10 years, governments are probably going to be more receptive to pharmaceutical companies because they see the desperate need. So yes, this is probably a very, very good suggestion. I don't have any at the moment. Watch ET now.
Well, we've done about 40 minutes in the webinar. I would encourage more questions. Lots of questions are popping up. Thank you for those questions. I'm going to take a next question from Mukund Bhaskar. Mukund, thank you for that question. Now, Mr. Rogers, we all know that in the short term, central banks will follow a loose monetary policy. It's about who's got the fastest printing press. But what happens when this comes to an end? Because interest rates can only go one way, which is they can only go higher.
Whoever asked that question has good insight, because yes, right now interest rates nearly all over the world are the lowest in recorded history, and that's going to change someday. When that does, the United States, for instance, is going to have horrible problems. There are going to be states that are going to go bankrupt, cities, pension plans, because huge debt has built up based on zero interest rates. Japan has horrible problems going forward. I've just written a book about Japan, what horrible problems they have going forward. So yes, whoever asked that question is very perceptive. If you look at any place to invest in the next few years, you better look at the debt situation, whether it's a country or a city or a company, because when interest rates go back to normal, and they will, there are going to be a lot of surprises, including in China. Even in China, they have a lot of debt now. They didn't have debt before. Nobody lend money to Mao Zedong. Nobody's going to lend money to Mao Zedong. But now even the Chinese have a lot of debt.
Bhavan's got a question on which is the best way to invest in gold. I think we've answered that. So Bhavan, thank you for that question. I'm just thanking you on behalf of Mr. Rogers also. Mr. Rogers, I remember 10 years ago when we spoke on a different forum, you said, look, I like China. They're doing the right things. And guess what? I am teaching my daughter how to learn Mandarin. What is your view on China? given that things may not be all that receptive for Chinese products now?
The United States became the most successful country in the 20th century. But along the way, we had a horrible civil war. We had many depressions with a D. We had no human rights, very little rule of law, massacres in this. We had many problems. China's going to have many problems, especially now with all the debt and what's going on. So when you see problems in China, I would urge you, if you know about it, to invest. There's an Asian word. The Koreans have it, the Japanese have it, and the Chinese have it. But it's the same character in all three languages. Basically, it means opportunity and disaster are the same thing. Weiji is the Chinese word. And if you think about it, a disaster is the same. And you probably have the word in India. You've been around a long time. But it basically means when you see a disaster, look for opportunity. And that's my view of China. Yes, there are going to be plenty of problems, especially, there are going to be bankruptcies in China in the next 5 or 10 years. Going to surprise a lot of people. It's going to surprise me. And I just told you it's coming. But when you see problems, I would urge you to invest. If you know what you're doing. If you know what you're doing.
Thank you. Thank you for that. I can see that you're already sipping some water from the silver glass. So you're that bullish on silver.
Yeah, well, partly because, as you know, I mean, the Indians have been around centuries. Silver kills germs too. Silver has a lot of wonderful traits. I hope this is a store of value, but also I hope it's killing germs.
I'm sure it is. That's ancient science, and we always love to follow ancient science in India. Mr. Rogers, since we are looking at a world where bankruptcies would increase, investment and capex will dry down, companies would be looking at automation and cost control. In general, should one avoid buying financial stocks in any country?
Well, for the most part, yes, because, in history, we've had long periods when the financial types were on top, followed by long periods when the people who produce real goods, the farmers, the miners, were on top. We've had 30 or 40 years for the financial types. There are going to be problems. There's a lot of leverage in the financial industry now. Politicians do not like financial types when bear market comes. In 1958, there were 5,000 MBAs in America every year. Now there are 50,000 in America alone, and God knows how many thousands in India and China and everywhere else. So there's huge competition now, lots of debt. A period where we're going, instead of 30 years of wonderful times in finance, we're going to be going into negative times in finance, and politicians don't like us. So if I were you, I would try to find other areas. But if you know smart financiers, people in the right place, the right country, if Mr. Modi would open India, if he'd open your financial markets, Indian finance would boom, boom. But now there's a blocked currency. It's very difficult for foreigners to invest in India. India could be a great financial center of the world. And China the same thing.
Given that there would be more digital transactions, we would be perhaps using more digital technology and tools. Would you be investing in cryptocurrencies?
Well, all money is going to be on the computer in the future. If you go to China now, you cannot buy an ice cream with money. You cannot take a taxi. You got to show them your phone. You can't take a taxi in China. And that's going to happen everywhere in the world. But it's going to be government money. Many cryptocurrencies have already disappeared and gone to zero. They're all going to go to zero in the end. Money is going to be on the computer, but it's going to be government money. 100 years ago, people could use anything they wanted for money, gold coins. Banks could print their own money. But then the Bank of England said, from now on, it's an act of treason to use anything except our money. Well, treason means they execute you. So people stopped using all other forms of money. And that the crypto guys will tell you, we're smarter than the government. And they are. They're smarter than every government. The government has the guns. I don't like this. I don't like it at all. The government's going to know everything we do. They're going to call me one day and say, you've had too much coffee this month. No, they know everything we do. They love it. but it's coming. Going to give them more control, but it's going to be government money. It's not going to be private money. I wish it would, but it's not.
You mentioned that you are bullish on agri commodities and you must buy things which people will eat because you don't stop eating. But what about real fears of trade war? We know that the Americans and the Chinese, if they will fight, it could have an impact on farm produce, soya bean. What happens to agriculture commodity where demand in general could be hit because of not consumption, but because of trade war?
Well, it's already happening. Agriculture commodities are already down. I'm not. You and I are not the only ones who know that trade wars are taking place out there. Many other problems in agriculture, but in the end, well, I mean, it doesn't mean they can't go down a lot more, but I would suspect in the end, we're all going to wear clothes. We're all going to eat. We're all going to drink tea. Going forward, I find the right people, the right place, the right price, and agriculture will do well.
Mr. Rogers, what do you think are the common mistakes which investors keep on repeating again and again? If you can put in your experience and share with us, what are the things which never change?
The number one mistake is hot tips. Everybody wants a hot tip. Everybody writing to you saying, please get a hot tip. Tell him to give us a hot tip. I promise you, that's the number one mistake people make. If they see something, they don't know what they're doing, and they'll go and buy it. And that's why most people do not make money in the investment world. I'm going to tell you a quick story. I know we don't have that much time, but I was once I had a show, a guy and I in New York. It was a call-in kind of show. And one week we were talking about Mexico, and I was talking about that Mexico was going to fall apart. And I said, and I'm shorting Mexico, and I'm shorting the Mexico fund. Lo and behold, 2 weeks later, Mexico fell apart. Guy called up, and we were talking about on the show, guy called up and said, that Rogers, I bought Mexico fund because of him, and I'm losing my shirt. We looked at each other. What? Rogers was shorting Mexico. Rogers was shorting Mexico. He thought it was going to fall apart. All the guy heard was Mexico fund, Jim Rogers, and he went and bought it. And he blamed it on me. So please do not invest in something unless you yourself know a lot about it. That's how you will become a successful investor. I know it's hard work. It's boring. We don't want it that way. We want a hot tip. But if you want to be successful, stop making that common mistake.
But to avoid any confusion right now, you're buying silver, you've bought gold, and you feel agri-commodities will make money. So at least we are getting this message right very clearly and nobody's getting confused.
Yes. Buy this, don't sell it. Buy this, don't sell it. But I did buy share. I mean, things that are, we know what's been destroyed around, and a lot of hotels are closing. A lot of anything to do with transportation and tourism is suffering badly. So there are I hope there are opportunities there, but do your homework.
You said you like India because of its diversification. Now, this year could be a hard one for travel and tourism. Next year could be hard for travel and tourism, but tourists will come back. Vaccine will be discovered. Is there an opportunity which you could think is there in Indian travel and tourism stocks which are completely beaten down?
You're asking me?
That's
you should watch ET now. What's wrong with you? Watch ET now. But I mean, of course, I mean, India should be and has been one of the great tourism countries in the world. You've got all these men and women that are so fascinating, these man-made and natural. I mean, the Taj Mahal is one of the greatest. I've been all over the world many times, as you know. The Taj Mahal is one of the most breathtaking places I've ever. They should not let people take photographs, because you see a photograph and you think, oh, I've seen the Taj. You haven't. You haven't until you walk in there and you say, oh my God, look at this. But so India, yes, I mean, you know that, but if you have to ask me for names of Indian tourism stocks, don't invest. Don't invest. If you cannot find the names, not you, but of your viewers, if you cannot find the names of the transportation companies and the hotels and the restaurants, if you cannot find it, you should not be investing.
Okay. So a couple of closing questions. I would encourage, got another 5 minutes before we, close the session. We've extended appointment with Mr. Rogers already. If Jim Rogers, if Jim Rogers of 2020 meets Jim Rogers of 1980s, what will he tell Jim Rogers of 1980s?
I would tell you, be sure to have children before this is over. I was always very against children, very, very much so. Children were a waste of time and money and energy. I didn't have my first child till I was 60, and that was almost an accident. I was wrong about children. Everybody should have children, but at the right time. Make sure you have the right time. But second, I would say be sure you learn a foreign language, especially in 2020, 2050, or 2030. Foreign languages will give you a big advantage over other people. So, and go to a foreign country. I would say if I had met me, in the 1980s, I went to China. I saw that China was going to become the most successful country in the world. You know how smart I am. I didn't stay. If I'd been so smart, I would have stayed in China. I'd have a Chinese wife, Chinese children. I'd be rich. But, if I had met me, and I was there in the 80s, I rode all over America and broadcast, go to China. It's going to be great. Did I do it? No.
So if your children says, Daddy, where should we settle now? Which is the next China? How would you address that?
Well, if you're just talking about the next 10 or 20 years, it's probably going to be the Korean Peninsula, because once the 38th parallel opens, that's going to be an extremely exciting place to be. It's 80 million people right on the Chinese border. But that's only for, say, 20 years. I would still say that China is probably going to be the most important country in the 21st century.
Okay. I'm going to not ask for a hot tip, but I'm going to talk about asset allocation. Next 1 year, next 3 years, the next 10 years, what should be the average asset allocation for a moderate risk taker?
And you're not going to like the answer. I'm going to tell you, if you know a lot about silver, you should probably have 100% in silver. But if you don't know anything about silver, don't own any silver. Asset allocation depends on what you know a lot about. If you cannot spell bonds, don't buy bonds. But if you know about bonds, well, not now. I wouldn't put any money in bonds, except maybe on the short side. But do not sit here and listen to me tell you about your own asset allocation. I don't know you. Maybe you're a 29-year-old female with no children. Maybe you're a 68-year-old male with 14 grandchildren. Asset allocation depends on you, and it depends on what you know. I know you want a hot tip. You want me to say, listen, if you turn to page 37 in this book, you'll know what your asset allocation should be. That is not the way to be a successful investor. There is no page 37 and there is no book.
I appreciate that, sir. And thank you that you at least been frank. And like a lot of market experts who come in, they give us all about having a mix of bond, equity, and gold. So I appreciate the fact that you're so frank, and I mean, our participants also appreciating that. That's what makes you different and perhaps a successful investor. So closing questions, Mr. Roger. When you look back at your investing career and when you reflect, what is one thing which you would say is your hallmark? Buffett is known for buying consumer monopolies. Charlie Munger is known for his lattice work of thinking. George Soros, someone you know very closely, is associated with understanding the currency crisis. What would you say is your hallmark?
First of all, I haven't seen Soros in 40 years. You might as well ask me about my first wife. So yes, once upon a time. People have called me in the press things like the Indiana Jones of finance, because I am always wandering off to some place that no one's heard of looking for investments. So I guess if I have to, it would be going and finding unique, untouched, unknown things. Commodities, I did a whole thing about commodities 20 years ago. Very few people even thought about investing in commodities. So I like wandering around, finding things where people are not looking. And that's what I've often done.
Will the Indiana Jones of investing world retire ever?
Wait, say that. I didn't hear what?
Will the Indiana Jones of investing world retire ever?
Oh, I'm having too much fun. Why would I retire? I mean, if I have a stroke or something, I guess I'd have to. But no, I am having too much fun. I'm not working as hard as I used to. I'm lazy, but no, I'm having a lot of fun. To me, there's nothing more fascinating than looking at the world and figuring out what's going to happen in the future. That to me is still just a wonderful, wonderful way to spend my time.
What
And
would you
if you do it right, you can find things to invest.
what would you say is one unusual habit of Jim Rogers, which is different? It could be annoying for others, but you still love it.
Having children when you're 65. I had my second child when I was 65. She's wonderful, fantastic. You know, she's turning into a teenager. I'm not suggesting teenage girls are necessarily great, but it's wonderful. It's fabulous.
And closing comments, Indian stocks, Indian food.
All the Indian food you can give me. All the Indian food. I just love everything about India that you put in your stomach. I love.
Well, really appreciate the time, Mr. Rogers. Stay safe on behalf of everyone who joined us on the webinar, people who are watching it on Facebook. Thank you very much. Apologies once again to everyone. We started a bit late, but sometimes the compulsions are at play. It's a Friday night, Mr. Rogers, so I hope you party hard. You drink a lot from that silver glass, and hope to see much more of you going forward.
Is tea. By the way, I will tell you a quick story about Indian
Yes,
food.
please.
I remember I was there once, and my wife and I, and we said to the guy, we want vindaloo. He looked at us and said, these are white people from America. And they brought it, they kept bringing us food. I said, no, vindaloo, vindaloo, vindaloo. I want it hot. I want it like Indians. Finally, you know, the fourth time, they brought me really, really vindaloo. It is fabulous. There is nothing like really, really hot, spicy Indian food.
Well,
Cheers.
thank you, time, sir. Thank you very much.
Thank you. My pleasure. Watch ET now. Watch ET now.
Thank you, sir. Thank you for the endorsement, and thank you for your time. Stay safe and
Thank
hope to
you.
see more of you. Thank you, everyone, for joining us on the webinar. Thank you very much.